Japan's economy throughout 2023-2025 has been experiencing what can only be described as a silent recession that almost nobody in global financial media is discussing, despite data showing economic stagnation that in some measures looks worse than Germany's widely covered industrial decline. Not a dramatic crash, not a financial crisis, but persistent near zero or negative real GDP growth, declining real wages for workers, increasing government debt that's already the highest in the developed world, and population decline, creating structural economic deterioration that has no clear solution. Let me show you the actual numbers because they reveal how bad Japan's situation really is. Japanese real GDP growth throughout 2023 was approximately 1.9%, which sounds modest but acceptable. But throughout 2024, growth has slowed dramatically to roughly 0.7% for the full year, according to estimates through Q3 2024. And throughout the first 3 quarters of 2025, Japanese real GDP growth has been essentially zero or slightly negative, depending on the quarter, roughly 0.5% to plus 0.3% across different quarters. This means Japan throughout 2024-2025 has experienced essentially no real economic growth for nearly 2 years. When you factor in Japan's declining population, falling approximately 0.5% annually as deaths exceed births and emigration exceeds immigration, Japan's per capita GDP throughout 2024-2025 has been roughly flat or slightly declining. Japanese living standards on average throughout 2024-2025 are not improving and may be getting slightly worse. Compare this to Germany, which gets enormous media attention for its economic problems. German real GDP throughout 2024 is estimated at approximately 0.1% to plus 0.2%, essentially flat, similar to Japan. But Germany's population is roughly stable, unlike Japan's decline, so German per capita performance is slightly better. Yet Japan's stagnation throughout 2024-2025 receives fraction of media coverage that Germany's problems receive. Japanese real wages adjusted for inflation, have been declining throughout much of 2022-2024. While nominal wages have increased modestly, inflation throughout 2022-2024 has exceeded wage growth, meaning Japanese workers throughout this period have been able to buy less with their paychecks than before. Only in mid to late 2024 have real wages started showing small positive growth as inflation has moderated. But throughout 2024-2025, real wages remain below 2020-2021 levels for many workers. Japanese household consumption throughout 2024-2025 has been weak, reflecting the real wage decline and economic uncertainty. Consumer spending adjusted for inflation throughout 2024 has been essentially flat or slightly negative, indicating Japanese households are not increasing consumption despite modest nominal wage increases. Japanese exports throughout 2024-2025 have been stagnant or declining in real terms. Japan throughout 2024 has faced weak demand from China, which is Japan's largest export market. Chinese economic slowdown throughout 2024-2025 has reduced Chinese imports of Japanese machinery, electronics, and components. Japanese exports to other Asian markets throughout 2024-2025 have also been weak due to regional economic slowdown. Japanese manufacturing production throughout 2024-2025 has been declining. Industrial production throughout 2024 has fallen approximately 2 to 4% from previous year levels, depending on sector and measurement. This manufacturing decline throughout 2024-2025 reflects both weak external demand and structural challenges in Japanese industry, including competition from Chinese and Korean manufacturers. Now let me explain why nobody is talking about Japan's silent recession despite data being publicly available. Media narrative throughout 2024-2025 has focused on Germany as the sick man of Europe, on Chinese economic problems, on U.S. inflation and Federal Reserve policy. Japan simply hasn't fit the narrative that major media outlets have been telling about global economy. Japan throughout 2024-2025 hasn't had crisis moments that generate headlines. No bank failures, no currency crashes, no political upheaval. Japanese economy throughout 2024-2025 has been quietly stagnating without dramatic events that create compelling news stories. Japan's problems throughout 2024-2025 are structural and long-term rather than acute and immediate. Population decline, aging society, high government debt. These are known issues that have been discussed for years. Media throughout 2024-2025 has largely treated Japanese stagnation as continuation of familiar patterns rather than new crisis worthy of intensive coverage. Japan's financial markets throughout 2024-2025 haven't signaled crisis. Japanese stock market, Nikkei index throughout 2024-2025 has actually performed reasonably well, up roughly 15 to 20% for the year in nominal terms. Japanese government bond yields throughout 2024-2025 have remained extremely low, around 0.5 to 1.0%, despite massive government debt. Financial markets throughout 2024 to 2025 have not been pricing in Japanese crisis, which reduces media attention. Geopolitically, Japan throughout 2024-2025 remains stable ally of the U.S. and key player in containing China. Western media throughout 2024-2025 may be reluctant to highlight Japanese economic problems when Japan is an important strategic partner in Indo-Pacific region. But regardless of media coverage, the data throughout 2024-2025 clearly shows Japanese economy in serious trouble with stagnation that rivals or exceeds Germany's problems, yet receives fraction of the attention. Subscribe to this channel if you want coverage of economic realities rather than just narratives that major media outlets decide to amplify. Now let me show you why Japan's data looks worse than Germany's in several key dimensions. Population decline is the first area where Japan's situation is more severe. Japan's population throughout 2024-2025 is declining approximately 0.5% annually, roughly 600,000 people per year. This has been happening for over a decade and is accelerating as deaths exceed births by larger margins each year. Germany's population throughout 2024-2025 is roughly stable or slightly growing due to immigration despite low birth rates. German population challenges are real but not as severe as Japan's outright decline. Population decline throughout 2024-2025 means Japan's potential economic growth is constrained even in best-case scenarios. Fewer workers means less production. Shrinking domestic market means less demand. Aging population means more retirees consuming resources while fewer workers produce. Japan throughout 2025-2030 faces arithmetic reality that without dramatic productivity increases or massive immigration, economic stagnation is structural rather than cyclical. Government debt is second area where Japan's situation is more severe. Japanese government debt throughout 2025 is approximately 260-270% of GDP, highest in developed world. Germany's government debt throughout 2025 is approximately 66-68% of GDP, elevated from pre-pandemic levels but manageable by historical standards. Japan throughout 2025 pays relatively low interest on this massive debt because Bank of Japan holds roughly 50% of outstanding government bonds and keeps yields extremely low through policy. But this creates fragility. If bond markets ever lost confidence or if a Bank of Japan tried to normalize policy, interest costs could explode and fiscal crisis could materialize rapidly. Deflation risk is third area where Japan faces unique challenges. Japan throughout 1990s, 2010s experienced prolonged deflation that damaged economic growth and trapped economy in low growth equilibrium. Throughout 2022-2023, Japan experienced inflation for first time in decades, partly due to imported energy costs and weak yen. But throughout 2024-2025, Japanese inflation has been moderating back toward zero. Risk throughout 2025-2026 is that Japan returns to deflationary environment where prices fall, Consumption is delayed because prices will be lower tomorrow, and economic stagnation becomes self-reinforcing. Germany faces inflation challenges, but not deflation risk. German problem throughout 2024-2025 is that inflation remains above target, not that deflation threatens. Currency vulnerability is fourth area where Japan faces acute pressures. Japanese yen throughout 2024 weakened significantly from roughly 130-135 yen per dollar to approximately 150-155 yen per dollar during portions of the year, before recovering somewhat to 140-150 range in late 2024 and 2025. This yen weakness throughout 2024-2025 reflects Bank of Japan maintaining ultra-loose monetary policy, while Federal Reserve and European Central Bank kept rates elevated. Yen weakness throughout 2024-2025 has made imports more expensive, contributing to inflation and squeezing Japanese household purchasing power. Japan throughout 2024-2025 faces dilemma: raise interest rates to defend yen and risk triggering recession and government debt crisis, or maintain loose policy and accept yen weakness and imported inflation. Either option is painful, creating policy paralysis. Germany doesn't face comparable currency pressures because euro is shared currency supported by entire Eurozone and ECB policy. Let me explain what's causing Japan's silent recession throughout 2024-2025. Weak global demand is first major factor. Japan is export-dependent economy. Japanese exports throughout 2024-2025 account for roughly 15-20% of GDP. When global demand weakens, Japanese exports suffer. China economic slowdown throughout 2024-2025 has been particularly damaging because China is Japan's largest trading partner. Chinese imports of Japanese goods throughout 2024-2025 have declined as Chinese domestic demand has weakened, and as China has developed domestic capabilities to produce goods it previously imported from Japan. Broader Asian economic weakness throughout 2024-2025 has also hurt Japanese exports. South Korea, Southeast Asian countries, India, all have experienced economic challenges throughout 2024-2025 that reduced their imports of Japanese goods. Weak domestic consumption is second major factor. Japanese households throughout 2024-2025 have faced declining real wages throughout much of period, creating weak consumption. Additionally, Japanese culture throughout recent years has emphasized saving and caution rather than consumption, partly due to long experience of economic stagnation, creating defensive household behavior. Japanese companies throughout 2024-2025 have been reluctant to raise wages aggressively despite labor shortages. Corporate culture of caution and focus on preserving cash has meant wage increases have been modest, even when companies can afford larger raises. This throughout 2024-2025 has kept domestic consumption weak despite low unemployment. Structural competitiveness decline is third major factor. Japan throughout 1980s, 1990s was cutting edge in electronics, automobiles, and machinery. Throughout 2000s, 2020s, Japanese companies have faced increasingly fierce competition from South Korean companies in electronics and Chinese companies in multiple sectors. Japanese electronics industry throughout 2024-2025 is shadow of former self. Companies that once dominated, Sony, Panasonic, Sharp, Toshiba, have lost market share to Samsung, LG, Chinese brands, and others. Japanese smartphone presence is minimal globally despite domestic market. Japanese consumer electronics throughout 2024-2025 struggle to compete on price with Chinese manufacturers or innovation with Korean and American companies. Japanese automotive industry throughout 2024-2025 faces existential challenge from electric vehicle transition. Japanese manufacturers, Toyota, Honda, Nissan, have been relatively slow to embrace EVs compared to Chinese, American, and some European competitors. Throughout 2024-2025, Chinese EV companies like BYD are not just competing with, but surpassing Japanese manufacturers in some markets. If Japanese automotive industry loses competitiveness in EV era throughout 2025-2030, Japan loses one of its few remaining global manufacturing advantages. This creates serious long-term growth concerns. Demographics is fourth major factor and the most intractable. Japan's working age population throughout 2024-2025 is declining approximately 0.9% annually, faster than overall population decline. This means fewer workers are supporting more retirees, creating fiscal pressures, and reducing economic dynamism. Japan throughout 2024 to 2025 has labor shortages in many sectors despite economic stagnation. This paradox, labor shortages during stagnation, reflects demographic reality that there simply aren't enough workers even when economy isn't growing. Labor shortages throughout 2024-2025 are being addressed partly through automation, but Japan remains resistant to large-scale immigration that could offset population decline. Without major immigration or miraculous fertility increases, Japan's population throughout 2025-2050 is projected to decline from approximately 125 million to potentially 110 million. Working age population could decline from roughly 75 million to 55-60 million. These demographic trends throughout coming decades make sustained economic growth extremely difficult without extraordinary productivity improvements. Now let me show you what Japan's government is doing throughout 2024-2025 to address recession. Fiscal stimulus has been deployed repeatedly. Japanese government throughout 2024 announced multiple stimulus packages totaling tens of trillions of yen to support households and businesses. These packages include cash handouts, energy subsidies, business support programs, and infrastructure spending. But fiscal stimulus throughout 2024-2025 has had limited effect because Japanese households and businesses have been saving stimulus payments rather than spending them. When population expects continued stagnation and has experienced decades of low growth, stimulus money gets saved for precautionary reasons rather than spent to boost demand. Additionally, fiscal stimulus throughout 2024-2025 adds to Japan's already massive government debt without generating sustained growth. Japan throughout 2025 is caught in cycle where stimulus is needed to prevent recession, but stimulus doesn't create lasting growth and only increases debt burden. Monetary policy throughout 2024-2025 has remained ultra loose, but with growing contradictions. Bank of Japan throughout 2024 has maintained negative or near zero interest rates and massive bond purchases to keep government borrowing costs low. But BOJ throughout 2024 has also intervened in currency markets to support yen when it weakened excessively. These contradictory policies throughout 2024, loose monetary policy, weakening yen versus currency intervention, strengthening yen, reveal BOJ's impossible position. Can't tighten policy without risking recession and debt crisis. Can't maintain loose policy without yen weakness creating imported inflation. No good options exist. Structural reform has been discussed throughout 2024-2025, but implementation has been slow. Labor market reforms to increase flexibility in wages. Corporate governance reforms to force companies to return more cash to shareholders and invest more. Immigration reform to offset population decline. All have been discussed, but meaningful action throughout 2024-2025 has been limited. Japanese political system throughout 2024-2025 has been unstable with multiple scandals and low approval ratings for government. This political weakness throughout 2024-2025 has made bold structural reforms politically difficult even when economically necessary. Let me tell you what Japan's silent recession means for global economy. Japan is third largest economy globally with GDP around $4.2 trillion. Japanese economic stagnation throughout 2024-2025 reduces global demand by tens of billions. Japanese imports of goods and services fall when Japanese economy stagnates, hurting exporters globally. Japanese financial markets are globally interconnected. Japanese investors hold trillions in foreign assets. Bank of Japan policies affect global bond markets. If Japanese financial stability ever came into question, global financial markets would face serious stress. Japanese technological and manufacturing capabilities remain important for global supply chains, despite competitiveness decline. Japanese companies produce critical components for electronics, automotive, machinery. Japanese economic weakness throughout 2025-2030 could disrupt global supply chains if Japanese companies fail or reduce investments. Japanese demographic trajectory throughout 2025-2050 is preview of what other developed countries will face as their populations age. South Korea, Italy, Spain, eventually China, all face demographic challenges similar to Japan's. If Japan can't find solutions throughout 2024-2030, other countries will struggle similarly when their demographics deteriorate. Now, let me tell you what I personally think is happening with Japan's silent recession. Japan, throughout 1990-2025, has been experiencing what some economists call Japanification, prolonged period of low growth, low inflation, aging population, and high government debt that becomes self-reinforcing equilibrium that's hard to escape. Throughout 2024-2025, Japan appears to be deepening into this equilibrium rather than escaping it. Brief inflation in 2022-2023 raised hopes that Japan might finally exit deflation, but inflation throughout 2024-2025 is moderating back towards zero, suggesting Japan may return to deflationary stagnation that characterized previous decades. Media silence about Japan's recession throughout 2024 to 2025 reflects several factors. Japan crisis is chronic rather than acute, so doesn't generate headlines. Japan is stable politically and financially despite economic stagnation, so doesn't trigger alarm. Western media focuses on Western economic problems and strategic competitors like China rather than allies like Japan, and perhaps unconscious bias that Japan's problems are old news, not worthy of attention, even when they're getting worse. But data throughout 2024-2025 clearly shows Japanese economy in serious trouble, worse in some measures than Germany, which receives far more coverage. This media blind spot throughout 2024-2025 means global understanding of economic challenges is distorted because significant G7 economy in recession is being ignored. Nobody talking about Japan's silent recession throughout 2024-2025, despite data showing essentially zero real GDP growth across multiple quarters, declining real wages through much of period, stagnant consumption and exports, falling manufacturing production, and structural challenges from population decline and aging society. Japan's data throughout 2024-2025 looks worse than Germany's in several dimensions. Population declining 0.5% annually versus Germany's stability, government debt at 270% GDP versus Germany's 66-68%, deflation risk returning versus Germany's inflation concerns, and currency vulnerability from yen weakness versus Germany's euro stability. As 2025 ends, Japan faces trajectory of continued stagnation through 2026-2030 without clear policy solutions. Fiscal stimulus adds to debt without creating lasting growth. Monetary policy is trapped between yen weakness and inability to tighten without triggering crisis. Structural reforms are politically difficult and slow to implement. Demographics are arithmetic reality that can't be solved without massive immigration that Japan resists. The silent recession continues. Media ignores it. And Japan, throughout 2025, provides cautionary example of how developed economy can stagnate for decades when caught in low growth equilibrium driven by demographics, debt, deflation, and policy paralysis. Lessons that other aging societies should heed, but largely aren't, because Japan's problems throughout 2024 to 2025 receive fraction of attention they deserve based on severity of data.